If you're ready for some heavyweight chart analysis, this is Outsider Club's Chart Wars. I'm Brit Ryle. This is my pal and colleague Christian DeHamer. We call him the Hammer because he always nails it. He's got a haymaker for us this morning. Christian, let me have it.
Today we're talking about Tesla. Tesla had a breakout last week. And here's a bullish case for Tesla over the next 5 years, powered by robots, AI, and unprecedented productivity. Brit, I don't know if you know this, but we're on a biggest productivity boom since the Industrial Revolution. AI and robots will change everything, and the leader in that is Tesla. Here's the chart. Let me share it with you.
Got it.
And as you can see, there was a big run up after Trump got elected, and it ran to 488. Since then, the stock has cratered 40%, back down to 288. Last week, it had a very good week, and it hit all right. So say go back in March, it hit a bottom and then a triple bottom over the next 2 months. Last week, it had a very good week and broke out above its trend line. That's very bullish. The yellow line is the 200-day moving average. It might run into some resistance there and pull back a little bit, at which point you should buy. If you're looking at a 5-year buy, it won't matter that much. The bottom down here, we see the MACD, moving average convergence divergence. It's a buy when it's below the zero line and there's a crossover, which we have now. I think I like Tesla for a number of reasons. They're projected to go from $100 billion in revenue right now to $500 billion revenue by 2030. They have their robo-taxi, which is going to come out within the next 2 years. It's priced at $30,000. That's opposed to Waymo, which is priced at $130,000. You have the robots going to come out in 2027. They have their own integrated AI with these robots, which isn't the same AI as like Grok, because that's a different, that's general knowledge. And these are like specific AI to your industry, right? Your mechanical, your factory and stuff like that. You also have the Powerwall and, of course, the Tesla itself, which is expected to double revenue in a couple of years. Tesla's a game changer. Elon Musk can quit the Trump administration at any moment and go back. That would tack on 20%, that day. I see, if you want to get rich, truly want to get rich, you buy stocks for 5 years and you ride the wave. You think Microsoft, Apple after the phone came out, et cetera, et cetera, et cetera. And that's what I got today. Buy Tesla on the breakout.
I like it. All right, Christian. Here comes my counterpunch. Snowflake. Snowflake, I'm going to put it on the 6-month chart to begin. Snowflake is a cloud data warehouse. It stores companies' data on the cloud for analysis and parsing. Snowflake competes with the big boys, Microsoft, Google, Amazon, and Roblox. Sounds kind of scary, but it shows you the quality of their product. They have customers like BlackRock, Petco, Lowe's, JP Morgan, Fidelity. They even boast tech companies like Adobe and Twilio using their platform. The company is just coming off a weak period for earnings. The last 2 quarters, the company has beat handily. Earnings per share is expected to grow 35% in the next fiscal year, which is very good. 6-month chart, my interest is in the 200-day moving average, which, as you can see, along with just about every other stock on the planet, it broke below it right after Liberation Day and then quickly recovered the 200-day moving average, this black line. That's the long-term trend line. It's a sign of strength that Snowflake has recovered that level so quickly. Went sideways here for a couple of weeks, dipped below it, and came roaring back. Stock is now challenging its 50-day moving average, which would be a resumption of the uptrend, of the medium-term uptrend for the stock. Now, for some perspective, the 5-year chart, Snowflake has been in a long consolidation pattern since early in 2022, when those earnings issues I just mentioned started to appear. Now, it's already tested the bottom of this consolidation pattern. It's run to the top and pulled back. Breakout of the 200 of the 50-day moving average, especially, sets it up for a potential move back to the top of that consolidation pattern. We're not even talking about a serious breakout here. We're just talking about a little optimism, bringing the stock back to the top of its consolidation channel. Currently 158. That's like up, $40 move up into the 190s, which then could potentially set the stock up for a move up into the 200s where it has been before. And not all that long ago, early 2024, it peaked up at 237. I think it's a pretty good spot for Snowflake as it seeks to break out of its 50-day, break above its 50-day moving average. Christian, that's what I got for you today.
That looks good. If it breaks out of that consolidation, it could run.
No doubt.
Yeah.
Thanks for tuning in to this week's Outsider Club's Chart Wars. Again, I'm Brit Ryle. This is Christian DeHamer. We'll see you next week.
Later.
You're right.